Gentlemen, thanks for tuning in and watching this video. Um, don't leave yet, all right? Just stay and hear what I have to say. Listen carefully what I have to say, right? I believe market is throwing a curveball, right? What is a curveball? You've played baseball before, right? A curveball, you must what? Target the ball very well before you swing. You know what I mean? Before you swing for the fences, right? To hit a home run. So why am I saying that, right? So this is what I'm looking at. So look at the SPY weekly chart, right? SPY weekly chart. If you watch my previous video, I did talk about SPY and where we are at, right? I'm not going to go much further more, but clearly you can see this red line here. We've been using that. This is the 2008 support, the 2008 resistance line, right? That has become support, right? So it's very well respected trend line that I've been using. It made me what? Figured out COVID. It made me short so much stocks. I mean, if you look at it, right? But what are we looking at? What are we looking at? What are we looking at? All right. So SPY, right? SPY, we are trading above. You can clearly see we are trading about what? 2008, right? Resistance, which now is what? Support line, right? Very well respected, right? Very well respected demand zone right now, right? So we are trading well above it. And it's all due to the 40% of all cash that was printed right during COVID. The stimulus, right? It was a heavy stimulus. Oh my God. What is the Fed seeing? Right? That made them print so much money like that. Like 40% of all cash in history were printed, right? During COVID. So what is the Fed seeing? All right. So due to that influx of cash, influx of stimulus that went into the economy during 2020, we've get out of range and started being in a what? In a very wide range. So the market is trading a very wide range. And in the previous video, I talked about how the market is using a cycle, right? The Elliott wave cycle, right? The Elliott wave cycle, right? The Elliott wave. So from COVID bottom, we can consider this as what? One push and then pull back, then three push, right? And then we'll probably maybe pull back the fourth time, right? After we melt up and peak somewhere around here, right? We'll probably pull back maybe before the market takes off for the final what? Push to the upside before we see a significant market pullback, right? So usually after Elliott wave runs its wave, right? One, two, three, four, five, right? Let me redraw that so you can tell. If you watch my previous video, you will know that I explained this, right? So this is the first wave up, second wave down, third wave what up, then fourth wave should come down, and then we should see the last wave, which is the fifth wave, right? And usually after the fifth wave is completed, we will have a pullback, right? And then a fake out, like it's going to try, right? Like the market will try to go take out the previous liquidity, the previous high. Um, then you will see that, right? Because after the fifth wave, we start counting one, two, three, four, five, right? Like that. Five, right? So one, two, three, four. Oh, no. Ugly. Two, three, four, five. Right? So you will see something like that as a correction of the market. So it seems like the market knows who is going to win this election. And I'm hoping that we get this pullback right here on the fourth wave, right? I hope we get this fourth wave after we hit 600 or so. We get this fourth wave for the market to cool down, accumulate enough cash for the last wave, right? For the last leg up. The last leg up will be the one that is just going to top the market, and then the market is going to be in a downtrend for quite a bit, right? So the market is expecting something to happen. The market is expecting something to happen in the future coming up. So if this is the last wave of the market, then know what to do. All right. So with all that being said, all right, this is already my video, right? Let me show you the financials, all right? And I talked about the financials as well in my last video. And don't go away yet. We still have to look at Google. Google is the one throwing the curveball, all right? Google is throwing the curveball. And maybe, the QQQ, the tech sector, right, is throwing a curveball. So let's look at SLF, the financials first before you go. All right, don't go yet. So the financials, right, when we saw that SPY, right, is trading above 2008, right, supply, right, zone. So now it's a demand zone now. So is the financials are the financials going to follow the same footsteps, right? And I think it is, unless it's a fake out, right, for another economic disaster ahead of us, right? So we're still using 2008 supply, right? So this is 2008. The dot-com resistance became a support line, right? So and we broke above it, and we had the financial crisis happen, right? The 2008 financial crisis. A lot of people knew about, well, they were anticipating charts, right? If you were anticipating chart, you are ahead of the game. You know exactly what to expect, right? So we've been using this price channel for quite a while, right? It became 2008 support, and then look at that, right? So now the financials are trading above it as I expected. I wanted financials to rip above it and go in a whole different range. Why? It's because of COVID, right? So now let's go to the Elliott wave on the financials, right? So we have, since COVID bottom, we have our first wave up, number one, our second wave down, number two, right? And it looks like we are pushing the third wave down, right? The third wave up, which is wave three. So we're pushing wave three, right? So are we going to top at 60, right? Or maybe less, maybe 52 before we pull back to confirm support, right? 2008 support. So support will, psychologically speaking, support will be like an economic plan, right? With the new elections coming, right? How is inflow of funds, right? How are funds going to be moved around due to policies, due to new administration policies, right? So if Democrat wins, and then now you know that, yeah, Democrats, right? You know the policies of the Democrats already, right? You know how the economy is going, like, because Obama initiated it, right? So if you think about it, right? So with that being said, I'm not saying I'm a Democrat fan or all that, right? I'm not. Nah, I don't even vote. All right, I don't even vote. I just only anticipate the stock market moves. All right. So it's in the melt up, and I believe we will get a pullback either after elections or 6 months after elections. We might get a pullback to come and test, confirm support for the financials, right? And then we will go for the last wave, right? As the spy was showing, right? We will go for the last wave. So this is the curveball that actually this is not the curveball, but you understand what I'm saying though, right? I'm trying to tell you where we are at right now in the market, and then compare it to what Google chart is showing us, right? So it looks like Google is going to be the chart to look at for guidance. Why? Because if Google breaks out of what I'm about to show you, that means Google is the one going to push us to top the market, right? Then pull back to 2008 support for new policies to take in place. All right. And kind of similar like the financials. The tech sector, technology, right? Let's look at Nasdaq. No, let's actually look at SLK, right? Let's look at SLK. 'Cause I mean, is SLK the same, right? It's giving us the same pattern, right? So we are kind of melt up. We will probably melt up, then pull back before the market goes for the last run, and then we will see a big push down. And you can take advantage of it if it's not a financial crisis, if it's not a recession, or if it's not a depression. But if it's a short-term recession pullback, right? That's how Wall Street calls it, right? Then you have a great opportunity to buy more stocks that are looking good, like SQ, right? A lot of stocks are looking very good out there, right? You buy those stocks. Tesla has been consolidating for quite a while, right? And so now the big picture, the curveball that I saw is Google chart, right? Google knowing Google knowing that there is something, right? Google knowing that, oh, we kind of know who's going to win this election, right? If you look at this chart right here, this is the weekly, right? The weekly is actually not showing the picture as you should. No, but when you see a weekly chart like that, right? We have dipped, right? So, right, and then you can see our left shoulder, our head, and our right shoulder that has formed, right? So more likely we could see Google makes its way up, double top, right? Then the sell-off will begin, right, in the market. The long pullback, at least maybe 15% drop, or 10 to 15%, or maybe even more, right? We will see that, right? Maybe after elections, or just pay attention to that after this melt up. That's how I see it, right? We could get that pullback back into the market, or Google could come here and stay in here until we make our way back up. All right. So that is the curveball that I'm looking at. Let's look at it in a daily time frame to make sense, to make good sense of what I was saying, so you can actually comprehend and grasps everything that I said, right? So this is what we are looking at. This inverse head and shoulders. This is called inverse head and shoulders. So a chart will only give you a look like this if it's expecting what? A price move up. All right. I mean, there's fake inverse head and shoulders. If we see chop around here, then we can consider this as a fake inverse head and shoulders. All right. And it will more likely come down. Right. So the longer it stays here, the longer um the longer it stays in a channel here, the more doubt I will have about this breaking higher, right? So the longer it stays in here, if it doesn't break up, right, the more doubt I will know what it's a fake head and shoulders. Then it's more likely going to be coming down here to fill that gap. All right. I hope you see the picture. All right. But on the other story, right? If it works out, inverse head and shoulders, right? You probably asking what is inverse head and shoulders? As I was explaining, right? Inverse head and shoulders is when a stock comes from a downtrend, right? Then bounce, right? I mean, you can consider this as a bear flag, right? And this is a large bear flag right here, right? So this bear flag, bear flag, bear flag, right? You see how the range of the bear flag got larger, right? So when it starts, it's coming from a downtrend, it usually ends up, right, finding a support level, bounce off support, then come and test previous support, right? As a bounce, right? So when price comes and price doesn't hold support, usually, right, it's telling us that there's a lot of, it's either people, right, it was fearful, right, fear, right? It's either they were fearful that, oh, we are going to what, drop like this down here, right? The market is right, it's gonna keep playing, right? And people will sell, when they see a price action, right? They probably bought in here, bought here, right? And then it didn't work out as much as they wanted this gap to fill, right? And price reversed and came a form ahead. So when it does that, it means it has trapped a lot of liquidity from here, right? It has trapped a lot of bulls, right? It has trapped a lot of liquidity. It has trapped a lot of liquidity. So knowing that smart money will come in, right? Smart money will come in, buy, and then take the stock higher, right? And then try to sell it to the next dump money. All right. So um so with that being said, sorry about y'all. That was a quick call here. With that being said, the curveball about this is that when you see a formation like this, right, we should expect price to go up, right, to fill whatever gap, right, and then it's like a rounded bottom, right, to fill gap or what, take out liquidity, right? Come and test this liquidity. It will try to come and take out this liquidity, and right, and probably right, we will see these sellers come back and try to take the stock down from here, and then we will come back down, right, to test previous support zones. All right, right, or you know what I mean. So with that being said, all I'm saying is that the market is throwing at the curveball the market is throwing is that we could see a higher melt up than the 600 price that people want to see. You know what I mean? Like on the SPY, people want this melt up to end about the 600 here. Then, I mean, that's what I'm anticipating on this um uptrend wedge, right? On this wedge right here. So that's what I'm looking at. I'm expecting something like that, and then hopefully we go and come down to test um the support lines of previous supply zones, right? Sorry, when I get tired, sometimes um my accent gets very very heavy. All right. So, we can see the SLF is ripping higher, and then this is going to rip higher, and it's going to rip higher. But eventually, it's going to bring the whole market down. So, going into next year looks bullish, but can you hold? All right. I believe is the last run for um the market is coming. The last push higher is coming, and it probably could be into next year by the ending of next year, and we might see a major global event or some sort of bullshit. All right, some sort of fear factor out there that is going to spook the market, sell off, come back to demand zones, and then you know what I mean. You deploy money and put money to work. All right. That's all what the market is about. And Bitcoin is looking great. We just have to come and tap 70K and then probably maybe pull back. Right, Bitcoin is looking great. It would be nice if we can come and tap 70K. Right, come and tap this zone right here, and then maybe like do something like this, and then go higher, or just go and come back. You know what I mean? So just keep an eye on it. The market is looking great. Some charts are looking great. If you look at my previous videos, I mentioned some names out there that is doing awesome. All right. So take care, everybody. If you need a stock to short, I mean, I'm not. This is not a this is this is not a financial advice. But Ari was a great short. You can tell earlier on today why did not matter airy, right? Airy, we had this top information here, right? We had this top information right here, right? It's stuck on the top trend, and then we saw this engulfing candle come in and then engulf this whole thing, right? So as a trader, when you see a reversal candle like this, that is a reversal candle confirming this seller right here, right? It's confirming this seller right there. that yep, chart wants to go down. So you pay attention to it. You draw your right? You draw your top line, your supply and demand line, and then when price is confirmed, all right, you make an entry, and what price will go down, will go in your favor, right? We could chop and then come all the way to 500. I believe that it's coming to 500 here, and if we don't take care, we might even go lower. All right, we might even go lower. So that is airy. That's airy. Oh, oops, that was airy. That was today's best trade was airy, right? If you go on my Twitter page, I believe that I posted about airy on one of my I posted about airy Tesla, right? One of the charts. So if you saw that, you would have taken some shots or puts whatever on this and make some nice money. All right. It's in the channel. So the trend is your friend, right? The trend is uptrending, right? The trend is uptrending, but where are we at on the trend? Are we on the top of the trend? Right? So when we are on top of the trend, you make sure that you grab your puts position, right? You grab your shorting position. So this is the trend right here. When we say the trend is your friend, right? A reversal confirmation, right? The trend is your friend, right? And then we had a huge reversal here. People exited, maybe bad news, whatever, right? After earnings, or maybe not even earnings, but a month, yeah, into a month of earnings, right? Sell-off confirmation, market run it bottomed, right? It run it bottom to come right back, as I showed you on Google, right? Google, right? And fill, right? Test previous liquidity high, went above liquidity, and then came right back into trend, and then top the trend. Now it's pulling back. Maybe we continue, or maybe we come down even more, right? So watch out, all right? I believe they have some sort of good fundamentals in quote, right? Some sort of good fundamentals in quote. So just do your due diligence, and then you should be all right. All right. So, ladies and gentlemen, that's all of it. I wish I can cover more, but I don't want this video to be longer. But right, recap. Google is showing the curveball, and the curveball is that Google is showing inverse head and shoulders, right? Google is showing inverse head and shoulders. Um, Google is showing inverse head and shoulders going into elections, right? So that means the market is kind of anticipating a price move, right? We're all going to go higher, and then we're going to go top the market somehow, and then pull back, and then even go higher, all right? If that is the case, then ladies and gentlemen, all right, all I can say is just anticipate, right? Anticipate good price action. Action, action for you all French speaking, action, all right, action, all right. So anticipate that, and then we should be fine. But if it goes left, you know what to do. Anticipate the market and short it as well, all right. So, ladies and gentlemen, that's all of it. Even if it goes left, right, it's like this would be like a head. This would be like a head and shoulders, all right. So, who knows, all right. That should be it. All that's all. Take care.